Okay, we continue with our class. So previous class, we were taking on Bartek Limited. We were to create the statement of profit and loss and the statement of financial position, isn't it? And you can see, so I'll just take this time to remind you that here the property plan, not property plant and equipment, plant and equipment was supposed to be, you'll change on your file, you'll change on your file here to be 40. That way, you can see that it's even balancing. So that's where the problem was. So I also change here. Isn't it? Then maybe just let me clear this one so that we start just afresh. Okay, so after I've brought in my unadjusted trial balance. So here will be the space for adjustments. And this one will be the adjusted trial balance. Isn't it? I'll merge the two here. Alt H and C to merge and center. Just a minute, the Excel is a little bit loading. I also merge this one, I can merge directly with the mouse and also bolden it. So I'll put it here. So this is the debit adjustment. Sorry for the spelling, and this is the credit adjustment. Control C, Control V. Control C and Control V to copy and paste. And remember, the figures are in thousands. Isn't it? You can see the figures are in thousands. So we start with the adjustments in the additional information. So additional information, number one, we've been told issue cost. The company issued shillings 30 million, 6% loan note. Issue costs incurred were shillings 1.2 million included in the administrative expenses, isn't it? So first, you have heard it was included in the administrative expenses. Issue cost should not be included in the administrative expenses. So we'll credit administrative expenses to reduce them because it's on the debit side, they are unadjusted. So here, 1200, isn't it? And the corresponding debit entry, it will be, you can just call it issue costs. So remember, we are on adjustments, isn't it? 1200. So like sometimes you may think you will confuse where the debit starts. You can just select from here, isn't it? Then Control Shift Plus to add another cell, isn't it? And maybe I'll put the color of the cell to be blue. Then I'll reduce the size. Sorry, Control Z. So you select the debit one, not the other one. Then Control Shift Plus, move cells to the right. Then I'll give it a color, and then I'll reduce the size. Isn't it? So here I'll clear the content first. Also this one. So that you can see that adjustment is on this column, on these two. So the adjustment is here. Then I'll also add another one here. so that it doesn't confuse me. So you can add even directly with here insert. Just click on insert. It adds another column, isn't it? Alt H B to remove the borders. Let me just be a little bit faster. Alt HBT. Alt HB. L for left border, isn't it? So they adjusted it's here. So we already entered the first adjustment of 1200. The issue costs, isn't it? I can mark that one so that I can see where the adjusted trial balance begins from. So we continue to note number 2. So number 1, there is no any other adjustment because you have been told the loan will be redeemed on 31st 12 2015 at a premium effective interest rate of 8%. So no worries there. Number 2, the company paid equity dividend of shilling 8 per share. So you can see also in our adjusted trial balance, we have dividends paid, isn't it? So it's already incorporated. Then we go to note number 3. Property was revalued to 72 million, 14 million being land as at 1st January 2013. Remaining useful life is 16 years. So we come to our trial balance. So land has been revalued to 14,400, isn't it? Because the value here, it is in millions and here it is in thousands. So it will be 14,400 minus the previous, isn't it? Enter. So that is revaluation, isn't it? Revaluation gain. The 2,400, isn't it? The 2,400 up here. Then, so building is the remaining, isn't it? The 72 minus 14.4. So we did it here, 72 minus 14.4. You get that what is remaining is 38,400, isn't it? So we'll come to our building, and for just clarification, because it's a evaluation, it means we're starting a new cost, isn't it? So we'll remove the accumulated depreciation and also the cost, isn't it? So this will be our starting cost, 38,400. And here our depreciation will be 0, isn't it? We'll not have the depreciation. So from 72,000 minus 14,400, you get 56. So buildings were revalued to 57,600, isn't it? So find the revaluation here is equals 57,600 minus the get 19,200. So the 19,200 is also a revaluation gain. So we'll add it to the 2,400, isn't it? To start with the equal sign. Then 19,200, isn't it? Then we go on. As at 1st January 2013, isn't it? And we are preparing the statement at 31st December 2013. So it's 1 year. So it means it has incurred depreciation. So depreciation buildings. So it was revalued to 57,600. It was to 72, but 14,400 was land, isn't it? So I'll just take this value, divide by 16, isn't it? The remaining useful life of 16 years. So divide by 16 here, enter, isn't it? We find out depreciation on building was 3,600, isn't it? So that we'll credit depreciation, buildings accumulated depreciation, buildings. So we credit here 3,600. Then we move on. So the company transfers excess revaluation to retained earnings. Ignore tax on revaluation, isn't it? So revaluation can be only transferred if it's realized, isn't it? If the year has been completed. So the amount that will be revalued, because this is what it increased with, isn't it? So let me just do this way, equal. And then we have 16 years. So what will be taken to the retained earning is this one, divided by the 16. And then it's 1,200, isn't it? So you look for retained earnings. So here it is retained earnings. It's on the credit side of the column. So to increase retained earnings, because it's like a liabilities on the credit side, we'll credit the 1,200. And on the revaluation gain, we will less it by 1,200. We move on to the next thing. So plant and equipment depreciates at 15% per annum on reducing balance. Depreciation of the current year has not been provided. So depreciation, plant and equipment. So just call plant and equipment, isn't it? So equal, it is on reducing balance, isn't it? So I'll open my brackets. The cost minus accumulated of plant and equipment. I close the bracket. I multiply by 15%, isn't it? Because it's 15% to get 9,000, isn't it? I'll credit accumulated depreciation with the 9,000. Then the note is finished. We go to note number 5. They say equity investments had a fair value of 18.84 million as at 31st December 2013. No acquisitions or disposals during the year, isn't it? So we look for the investment. Where is it? Equity fair financial asset investment, isn't it? It was 2,400, but now they say it is 18,840. It means it has reduced, isn't it? So if it is reducing and it's on the debit column, we credit, isn't it? So here, equal, so it was 2,400 minus 18,840. Isn't it? You get 1,560. So this 1,560 is fair value loss. Sorry. So the 1,560 is the fair value loss. We move to the next. So that one we finish on note number 6. A provision of 8.8 million is required, isn't it? When you just see a provision, it becomes like taxation, isn't it? The provision is a tax provision, isn't it? Obviously, because they say the company temporary difference was 6 million, requiring a provision for deferred tax, isn't it? So tax payable. So this one we credit because it's payable, not paid. isn't it? So it will be 8880 because this one is in million and this one is in thousands. Then the corresponding debit will be the income tax expense here. So this one will debit the same amount, isn't it? Then the company temporary difference. So you must know that temporary difference times tax rate is equals to deferred tax, isn't it? Requiring, so equals the 30% because you've been told the tax rate to be 30. You multiply by the 6 million, isn't it? So it would be 6,000 in thousands, isn't it? You get the 1,800 that we found here. So this 1,800 is deferred tax for the year, isn't it? And you can see we had previous deferred tax, isn't it? So we find the difference, 1,800 minus 40. Then you find that 360. And we've been told requiring a provision for deferred tax, which should be reported in the income statement, isn't it? So deferred tax doesn't come in the income statement. So this one was like an under provision. So we'll add to the income tax expense to the debit side because it's on credit. So I'll debit the amount here equal plus the 360. And we have finished our, so I'll just do equal sum. I press tab, then I select the cells, control enter, control backspace to jump to the active cell. Then I'll do control R, isn't it? You can see that it's balancing, control bolt. You can see that it is balancing. So it's time now we create our adjusted trial balance. So equal, so what is, because I'm starting with revenue here, you see revenue is on credit, so I'll come on the credit side. Or let me just escape first. I do this. Credit. So this one I'll put up here. So equal sign, isn't it? Because it's on credit here, isn't it? You can see it's on credit. So it will be the sales here, what is on credit, minus the debit adjustment plus the credit, isn't it? Plus the credit adjustment. I come to cost of sales here equal. So you see cost of sale is on the debit side. So I'll take the debit plus the debit here minus the credit here. Sorry, here up, enter, isn't it? So I'll drag what is on the up to here. Just drag this way. You can see, oh, the adjustment here was in administrative expense. You can see that the adjustment, so it was 22,800 minus 1,200, you get 21,600. The adjustment has already been done. So I'll copy here, Control C. I come, because this one is on credit side, so that's why I'm copying. Control Alt V, then I copy formula, isn't it? Then I drag up to there, then Control C. So here I can just even, when you are copying, the formula has more preferred than, like has higher priority. Let me say the formula has a higher priority. Like here, Control V, it will take the formula, isn't it? Because if I do Control Alt V, the priority is this way, isn't it? The formulas have a higher priority than the values or the format. So if I just copy direct, it will take the formula, isn't it? And when I click on this cell, you can see that it is what is on the debit plus what is on the debit minus what's on the credit, isn't it? Escape, I'll drag down. up to plant and equipment. So I'll copy also this one here, Control C. I paste Control V directly because there's no format that I want. So I'll just drag also. Must be very careful here. You see here, the equity financial asset investment. It's on the debit side, but the adjustment is on credit side. So I'll take what is on the debit, Control V. You can see that it is less, and this is what you are told here. The fair value head, the investment is a fair value of 18.84 million, of which it's here, isn't it? Then all of this up to income tax expense. Then so I'll copy this one, Control C. I'm here at deferred tax, Control V, 1800, of which you saw how we found the 1800. Then I'll drag. Then when I come to the additional or the entries that we made, the additional one, this one I can take directly because they had no previous or opening balances, isn't it? So I just take them as they are. I'll take all this way up to there. Then I also drag left, isn't it? So the value that has nothing, it will be written as 0. So I'll come here, equal sum, press tab. I take all the numbers up to there. Control Enter, Control Backspace to jump to the active set. Then I'll do Alt HBP to put a top border. When I come to this side, I do Control R. Isn't it? Control Bold. So maybe I'll remove the borders here, Alt HBN. Isn't it? It is looking good. So it's just now presenting it, Alt HBT. Isn't it? So here is where we introduce another column, the net balance. So sometimes the net balance can confuse you, isn't it? You can just call it sum range so that I don't confuse the formula, because it will be the sum range in the formula, isn't it? Equal. So our net balance is the adjusted trial balance, the debit minus the credit, isn't it? Enter. Then I'll just drag down up to there, isn't it? Then I do Alt HBT. I've already put the border, isn't it? So introduce another column here, the tag column. Isn't it? If you confuse it, just call it the range. So first off, revenue, it will be just revenue. This one will be just cost of sale. This one will be distribution costs. Administrative expenses. So this one is interest payable. Or it can be called accrued interest, isn't it? Dividends. This one will be just investment income. You see, because most of them, there are not very many. So most of them actually look the same here. So I just take the Control C, Control V, then retained earnings. So you see land will fall under PPE, property, plant and equipment. Also buildings. Then also plant and equipment. also accumulated because they are a contra asset, they will fall under PPE also. So this equity financial asset investment. So just equity investment. So this one is a long-term asset, isn't it? Inventories. Then this one would be receivables. This one will just be bank. This one will be income tax expense. So it's just the same as it appears there. So even deferred tax the same, even payables. So I can just take the two, Control C, then Control Alt V, because I just want the values, I don't want the format, because it will copy with the borders. That's why I just took the values. So issue costs will be finance cost. There will be revaluation gain. It's an item of other comprehensive incomes. So depreciation will be an administrative expense. Also depreciation there, isn't it? This one will be other expenses. Then it will just remain tax payable. Isn't it? So tax payable. And it's like we are forgetting something. You see, we had also the part of, so I'll just select from here, then Control Shift Plus, move cells down. Isn't it? We had something on here, the 6% loan note, isn't it? It must result into interest expense, isn't it? We don't have interest expense. So here, interest expense equal the 6%. You multiply by, what was it? It was 30,000, isn't it? 30, 1, 2, 3. Isn't it? To find that is 1,800, isn't it? And see, so what we will credit? We'll credit interest payable. Yeah, interest payable. So we credit 1,800. So our interest payable will be 0. So we will not have a liability called interest payable because it was paid, isn't it? So we just now do the, like, it was an expense, then the expense for the year, and that is what was paid. So maybe I just do the tables. Sorry, so this one is okay. Actually, I'm sorry. So this one will not be here. We are under adjustments. We are crediting here because it was under adjustments. The same thing, so it will give also a 0. So you can see it balance. So just so also this one needs to have the summation here, isn't it? Because it's on the debit side of the adjustment, so I can just drag, because here there were no opening balances. That way, that was the error, Alt DT. So interest paid also falls under finance costs. That we finished. So I select my column there, the tag column, Alt HBT. or there is something merged, but it's not a must. So the retained earnings, the loan note is merged, also the investment income not merged. Nothing else is merged. So I don't know. I think there's something merged, but so we'll just do it. Alt HBT. So I'll leave there. We have skipped one line. I wanted it to be very organized. So I can just select the data also. And I click there to unmerge everything. So we come to start our income statement. So control board, Batik. Statement of profit or loss. Isn't it? For the year, you write the year. So the first thing here it is revenue. Control C. I'll just take them as they. So all this goes to the income statement. This is a shorter way of doing it, isn't it? I just take them, Control V. Then here, Control Shift Plus, I add. Control Shift Plus, I also add, isn't it? So interest payable goes to the statement of profit and loss, dividends, investment income, Control C. So Control V. Then what else? Share capital, PPE, equity investment, inventory, receivable, bank, income tax expense, isn't it? Control C. Control V. Deferred tax payable, finance cost, Control C. Isn't it? Finance cost comes somewhere below there, Control V. Isn't it? And it's like now we've taken everything. That's, isn't it? So just here, control board, it will be gross profit. Isn't it? Here, it will be earnings before interest and tax. So I can do that bold. Then here, shift, I'll add another cell. Isn't it? The cell will be earnings before tax. Isn't it? After that one, the other thing will be profit after tax. Isn't it? Then we have other comprehensive income. I just write OCI, other comprehensive income. We have revaluation gain. Isn't it? That's what we are not taking. And where was it? Here, revaluation gain. Control C. Control V. Then total comprehensive income. So I'll be back here. Isn't it? I'll remove just the borders, Alt HBN. Then I'll widen the spacing. Isn't it? I think everything is as it needs to be. Alt HMC to merge and center. Equal. So here is where I introduce the function that we'll be using. We'll use some if. We press tab. So I told you this one you can name it range, isn't it? Because we have been asked range. So the tag column can also be named range. You take the column there. All of it, I think it's up to there. Then you press F4 to lock it so that it doesn't move. The range will just be fixed for even if we drag down, isn't it? And then the criteria is this. So the reason why we are not locking the criteria, let's be back at the criteria, because when we drag down, we want the criteria to reflect here. This is in Excel called cell referencing, isn't it? It is the relative position of the cell. So that when we drag down, it goes to cost of sale. It doesn't remain to revenue. And here we locked. This locking is called absolute referencing, isn't it? it doesn't move out of here, because if we don't lock, if we drag down, it will move to, so the table will be starting from here. If we move again to investment income, the table will be starting from here, going down. So that's why we are looking, so that the table doesn't move, it becomes fixed, isn't it? Comma. Then the sum range, the net balance, select all of it. And you lock it. So F4, shift to close your brackets, then enter, isn't it? It will start as a negative, don't worry. I was checking here. So remember, this adjustment, isn't it? We adjusted that, but it's not reflecting here. So maybe we never drag down so that it reflects there, isn't it? On the net column balance. Then maybe sometimes it's good to confirm. So I click here, I can see this cell 35 here, isn't it? So I'll make sure my formula goes up to 35. You can see goes up to 35, and this one even goes more, isn't it? You can also just type there 35 manually, isn't it? Control enter. And because Excel takes, because of our net balance, we did debit minus credit, isn't it? So what is on credit will be displayed as in a negative format. So I'll introduce negative in front there, enter, isn't it? Then I drag down up to the very down there, isn't it? I come back to this cell, alt equals the sum, isn't it? Control bolt, control enter. We go here, alt equals, make sure it has taken the gross profit, control enter, control bolt, alt HBP for a top border. Then finance cost equal, you can do directly this one here, plus because the finance cost is in negative, isn't it? Control bolt, here T here equals here plus the income tax expense, isn't it? Then this one is control bolt. I will remove that one because there's nothing there. So here, total comprehensive income will be the profit after tax plus revaluation gain, isn't it? Control bolt, alt HBP for a top border. Then I'll select the data. I do alt HBT so that I lock it like there. Alt HBT so that it looks clean, isn't it? These greener parts are just error checking, but nothing, because the formula is different from the others. That's why they bring in for you to check to see if it's an error, but it's not an error because the formula here is sum if, but here it's an addition. So I just ignore the errors. Then I put the commas there so that it looks clean, isn't it? Now we go to statement of financial position, control enter, control bolt. Isn't it? I'm just taking items here, so interest payable, but it will not have anything. So if you don't want to confuse, just go straight by straight, isn't it? So we also have dividends paid. So dividend paid comes to the statement of changes in equity. We'll create a statement of changes in equity here, but the statement of changes in equity will only affect retained earnings. That is, we'll add our profit here, profit for the year to retained earnings, and we'll less dividends. And we can just do that in the statement of financial position as an adjustment, isn't it? Then dividends, okay. So for dividends, they'll remain. I can put there assigned to show that I'll come back for it. Then investment income, share capital. Share capital is something also to loan, also to retained earnings, also to PPE, isn't it? Control C. I'll copy all of them. I put them here, control V. So PPE comes on top, control V, control X. So this one comes below somewhere there, control V, isn't it? And here we'll have another one called revaluation reserve because we revalued our buildings. Then, so we have taken PPE, equity investment, inventories and receivables, and also bank. These ones are current assets. Control C. So they come somewhere there, isn't it? Deferred tax. This one is an uncurrent liability, so it will be with the loan. Payables is a current liability, so it will be with the interest pay. Okay, the sound, we are back. We had an internet issue. And while checking there, I've seen that maybe we just finish on the here. So payables you've taken, revaluation gain. So we also have other expenses. This one was to come in the income statement. We forgot. So I'll just add another column. That is the advantage of Excel. So we had other expenses. When you correct, you just create some space and you correct, isn't it? Not like the others, the manual one. You have to rub everything. So here, Control V, other expenses, and I'll drag the formula down so that it takes the formula. And you can see that it has corrected everything. Isn't it? So we've corrected the other expenses because they were to appear also. So I think the other expenses there. Then we look at what is tax payable, isn't it? We are here under the statement of financial position, isn't it? I'll take the tax payable, Control V. So now I'll make it look clean. So up to here, Control Shift plus, move cells down. Control Shift plus, move cells down, isn't it? So that one will be total. So I'll write T, NCA, total and current assets. Isn't it? Then also here, Control Shift plus, move cells down. Control Shift plus, move cells down, isn't it? So here it will be control board, total current assets, isn't it? This one I'll remove control minus. Then I can just select Control X. No, here we must have total assets, control board, total assets. So here I'll do spacing, isn't it? Total equity. So I'll write total equity just that way, or total equity. I'll also add spacing here. So that is total and current liabilities. Then total current liabilities, then total equity and liabilities. Control enter, control bold. I'll remove the border there, so I'll do Alt HBN. Isn't it? And because of the time essence, isn't it? This formula we had already written here, isn't it? You can just do Control C, Control V directly, isn't it? Even without, because the formula has a much priority. But now, here it will not come with a negative, you must remember that. But for the part of equity, it will need a negative. Up to there, Alt HBN to remove the borders, isn't it? So here, Control C, Control V. So for the part of equity and liabilities, it needs a negative in front of the formula, isn't it? Control enter. Then I drag up to there, isn't it? So here, Alt equals Control enter, Control bolt. Also here, Alt equals Control enter, Control bolt. Here equals total and current plus total current, Control bolt, isn't it? Alt HBU, because balancing, so Alt HBU gives two borders like that at the bottom and one on top, isn't it? Here I'll do Alt HBP for a top border. Here also Alt HBP for a top border, isn't it? So revaluation reserve, isn't it? This one we will take directly from our adjusted one. So the revaluation gain goes to the revaluation reserve, isn't it? You must know that. So we'll take the figure there, Control enter, and we want it as a positive, so negative in front of the formula, isn't it? Then retained earnings. Remember this retained earnings, we always add profit after tax. So it will be plus this 28 minus, remember the dividends, isn't it? Because we're not creating the statement of changes in equity. So plus this one here, minus dividends paid. So sorry, dividends paid is here, isn't it? This one was the dividends paid. So it must be dividends paid, you see. So we less that amount there, isn't it? Control enter, Control backspace to jump to the active cell. So here, Alt equals. So I must be very careful not to take total assets, isn't it? Because this is total equity from there. Control enter, Control bolt, Alt HBP for a top border. Then here, Alt equals, Control enter, Control bolt, Alt HBP for top border, isn't it? Interest payable will be 0. So here, Alt equals, Control enter, Control bolt. Then, so our total equity and liability equals to our total equity plus our total non-current liability plus our current, isn't it? Control bolt, Alt HBU, isn't it? I told you the greener part is just for error checking, so we'll ignore the errors because the formula is different. You see, it is an inconsistent formula. It just doesn't look like others, but we don't want them to look like others. So Alt HBT, Alt HBT, then I'll merge here, Alt HMC, isn't it? So that's how we prepare the statements, the respective statements, isn't it? I think by now you can prepare on your own, isn't it? So today I'll send an assignment. It has 2 like these ones, and then 1 statement of cash flows, isn't it? I'll send immediately after the class. So we go to Darubini. So Darubini here, this one is a statement of cash flows, isn't it? This one was a pilot paper question, isn't it? So it's just to show you how to create a statement, isn't it? Maybe just, okay. So I'll read the question. I think you are good. Or is there any question regarding? Okay, someone told me we corrected on the left expenses. Other expenses we corrected. Sorry, I was not checking the chart. We corrected that. It's here. Isn't it? Now we go to statement of cash flows, isn't it? And as always, I'll give you a tip that you can use, isn't it? Here, maybe just I take this time to remind you. Here, the tip was assets. They're still here, assets and expenses. Debit, debit, that is on the trial balance, isn't it? The adjustment. Liabilities and incomes, we credit, isn't it? Now doing the adjustments, this is what you do, isn't it? That one, I think the point is home just. So this one is a very important tip. You can see just maybe I just show you, isn't it? This one is an asset, it should be on the debit side. And this share capital or 6% loan, it's a liability, it will be here. Revenue is an income, it will be on the credit side. We go here, tip. Isn't it? So the tip, if it's an asset, the putting in the adjustment will be the previous value isn't it? Minus stroke plus adjustments. So these ones will be in bracket. This one is a tip, very important. So then you less the current value, isn't it? And if it's a liability, you start with opening brackets, it will be current value minus stroke plus adjustments to close bracket minus previous value. Yes, previous value. So once you can use this tip, there is nothing can be hard for you, or nothing will be hard for you in preparing statement of cash flows, isn't it? So the question reads, maybe you can write somewhere this one so that you'll see how we use it. Don't worry. And you can always chat if you have any question, isn't it? You'll see how we use it. You can write it somewhere. You have been provided with the Okay, I'm saying someone to chat, please, to where were we when we lost, had we started on statement of cash flows, or when I was giving this tip? The question is, when I was giving this tip, was I on or it was off? Okay, so I'll continue. So we've been provided with the following extracts for Darubini Limited for the year ended 30 June 2020, 2021, and 2022. There you can see you have a statement of income statement in other terms, isn't it? And here we have the statement of financial position. Maybe it's just that it is lost, Control Shift plus, it is hidden. So there we have also the statement of profit and loss, isn't it? So I'll confirm the statement. Then you've been required prepare a statement of cash flows for the company for the 2 years ended 30 June and 2022, isn't it? 2021 and 2022. So this one is a simple one with this tip, okay? Statement control board. statement of cash flows. Isn't it? So statement of cash flows are three things. You have operating, investing, and financing activities, isn't it? So we start with operating activities. Isn't it? So what we always start with is the profit before tax, isn't it? So here equals, so it is for the 2 years. Maybe I can escape first. I'll control X, and I paste them here, control V, isn't it? So it's for 2021 and 2022. Sorry, let me just, I want it to be in a number format, so I can click here. Then I do number. I remove the separator. Okay, isn't it? Then control bolt. So maybe I'll put this one here. Oh no, it's just good. So maybe I widen the spacing. So control bolt, isn't it? We always start with profit before tax, isn't it? You can see it is here. Profit before tax for the 2 years, isn't it? Equal sign. Where is it here? This one. This is not 2020, isn't it? You can decide to drag left now or drag later. Same thing. Go to adjustments. Isn't it? You have depreciation. So remember here, depreciation, we are adding back, isn't it? So I'll start with a negative because it's here, the 800. You can drag now, drag later, it will be the same. So here we'll drag later because here we dragged immediately, isn't it? Then, so I'm just from here, profit before tax, I took depreciation. Also, I'm taking finance cost. Tab. So I start with a negative because it was in a negative format there. Isn't it? This one I'll unbold. Then so there's nothing else that this one was a simple one, like an introduction to it. So you can see from profit before tax, we look for expenses that are non-cash, isn't or non-related to our operation. Our finance cost relates to, I think, the concept you have, isn't it? And depreciation, this one is because it's not a cost. Other these costs are related to operation, isn't it? Because you're still under operating activities. We'll go now to working capital changes. So I'll skip one line there. So working capital changes. So if when you are learning treatment of cash flow in financial reporting on financial management, we know only three things affect here, and they are the receivables. So the advantage of Excel is it doesn't give you a priority, like it's not a must to know how they are saying if receivable increases, do we less or do we add, isn't it? We also have inventory, and we also have payables. Isn't it? Then net working capital as a total. So that is net working capital change. Isn't it? We are here at receivable equal sign. So here's where the tip starts. Isn't it? Receivable, this one is an asset. Isn't it? So previous value minus adjustment. Those are in bracket minus current value. But we don't have any adjustment on, because this one is just a starter one, isn't it? We don't have any adjustment on on the said receivables, isn't it? So here, this is 2020, this is 2021. So the previous value, it is the value of 2020 because we are working on 2021, isn't it? So receivables, here it is. So it will be this one, this value. So it will be direct minus the current value, isn't it? Inventory, previous value minus current value, isn't it? Then payables. So payables is a liability, isn't it? So it will be current value minus previous value. Where is it? Yeah, so this one will be current value. Sorry, I had not started with equal sign. So equal, I'll go back there. Payables, so the current value minus the previous value, isn't it? Enter. Then just so if that one is so the net change, isn't it? Alt equals control enter, control bolt, isn't it? Also here I'll find the sum so that the part I skipped tab. So from here up to there, control enter, control bolt, isn't it? So we'll do tax paid, isn't it? Less. So I just write tax paid, isn't it? And because this is tax paid, we check if we had any. So we look in our statement and see that actually there were no current tax or deferred tax, isn't it? So if they were not there, we just take the value here, isn't it? For the year, isn't it? Now cash flows from operation equal sign. So it will be so this one here plus the net change in working capital plus the tax paid. So it's negative. So that's why I'm just adding it directly, isn't it? Control bolt. So this one also will be control bolt. We go to investing activities, control bolt, investing. So investing, you can see our PPE here, isn't it? So it will be equal. So PPE is an asset, isn't it? So current previous value, row is it? Sorry, escape. So acquisition of PPE equal sign. So it will be the previous value. Remember, under PPE, there are several things you should consider, isn't it? We always consider depreciation, isn't it? We also consider revaluation, and we consider disposals and also any new additions, isn't it? So here, the only thing that was there was depreciation, isn't it? So it will be minus depreciation. So this is the adjustment here, the adjustment, the perfect, isn't it? So minus depreciation of which was 800, isn't it? Now I close the brackets, I do it in brackets. Isn't it? So this value, I less the current value, the 2021 value, isn't it? Don't worry when you drag, because there's no locking, everything will go as saved. Then I think you just look in the statement. This one we've dealt with, this one we dealt with, this one we dealt with. This one is cash and cash equivalent. isn't it? There is nothing else from investing. So this one can be the total from investing. Control bolt, isn't it? You go to financing. Control enter, control bolt. So under financing activities, first we have interest paid, isn't it? The finance cost here, the finance cost, isn't it? That's why it's called finance cost. But here, because it will be paid, it will go in directly as it is. Then, so just look here. You go to equity and liabilities for financing because most of them are there. We have loan, isn't it? So loan equal sign. So loan is a liability, isn't it? So this one, current value minus previous value, isn't it? Then maybe I look up the capitals. You can see that capital, no change occurred. So there will be no change, isn't it? So I think now we are finishing cash flows from financing. This one was a simple one. Let's work faster so that we deal with the other one. So it will be equals this one here plus this one here. Control enter, control bolt, isn't it? Net cash flows. So we go to something serious, net cash flows. So the net cash flow will be from operation plus from investing plus from financing, isn't it? Control enter, control bolt, isn't it? Alt HBP for top border, isn't it? So here's where we drag now. Just come here, isn't it? I drag left. Sorry, control Z. So sorry, I took one. So we first check all, isn't it? Then you take left. Isn't it? Doing that, let me see the chart. So like finance cost is not, but you see finance cost is like interest paid, isn't it? Interest paid. So sometimes it's displayed here. Tax paid and interest paid, isn't it? But remember, this finance cost, it is interest paid for acquisition of a loan because there's nothing else this company could pay interest for apart from long-term borrowings, isn't it? There's nothing else the company could pay for. So even if I display it here above and I display it here below, it's just the same thing, isn't it? Or ratherly, because in other ways that you can do it, we'll do it this way. Let's remove this one, isn't it? Then I do clear content, or maybe just do delete, isn't it? So we are here on loan, isn't it? Loan is a liability. The adjustment minus the adjustment, isn't it? 7,000 finance cost minus the current value, isn't it? So that's what I was doing, but now I did it finance cost alone, isn't it? But sometimes it appears here. It is also correct if it appears here because it has been paid. But it's like, let me just explain. You see, here we are doing operating activities, isn't it? And finance cost, actually, it's not an operating activity, isn't it? This one is like operating activities are the company, the company like it's selling, isn't it? It is selling. That's why at first we added it back, because it's not an operating activity. But if displayed here, it's also correct. So now to confirm, so we'll go to, so this one is the net cash flow. So we go to cash and cash equivalent. So the first one is brought forward, isn't it? Equals. So remember we are on 2021, isn't it? So it will be this one. So brought forward should be the starting balances, isn't it? This one would be carried down, isn't it? So this one, we also had bank overdraft, isn't it? So minus bank overdraft here, isn't it? Then enter. So maybe I make this one in bold, control bold, so that we know it is the net cash flows. Then I'll just drag, isn't it? So cash and cash equivalent. Equivalent carried forward. Will be equal the additions. So this one, shift plus this one here, isn't it? Then I drag, isn't it? So here is where we confirm. So confirm, like here we must confirm. So cash and cash equivalent carried forward, isn't it? It would be equal. So what is carried forward is on the year, isn't it? So cash here, this one minus bank overdraft, isn't it? Then we drag again. You can see here the difference is just like one, which is not bad. Isn't it? That's how we prepare a simple one. This is a very simple one with fewer adjustments. Isn't it? Okay, we have 30 minutes. So let's try as much as possible. We finish the Bermuda one. Then I'll be leaving the assignment. Isn't it? The assignment also has one cash flow and two statement of profit and loss and financial position. There are two. So we'll start. Bermuda Limited presented the following financial statement for the year ended 30 June 2021 and 2022. So the profit and loss statement and the statement of financial position, isn't it? We have additional information. Additional information number one, property, plant and equipment held by Bermuda Limited are items of plant and equipment and freehold premises. During the year ended June 2022, items of land and equipment, which originally cost 40 million, were disposed of, resulting to a loss of 6 million charged in the administrative expenses. This item had a net book value of 28 million as at the date of disposal. Depreciation for the year is 43 million. Then note number 3, 50 million of convertible loan stock was converted into 50 million ordinary share capital at par during the year ended 30 June 2022. So let me take the chart. Okay, we used depreciation. Let me just take you back. Okay, we used this depreciation, isn't it? Or let me just widen on the tip, isn't it? So here, the assets one, The asset one we less expenses, comma, and we add incomes. Okay, let me just put something in front of it so that, isn't it? Then for liabilities, we add the expenses, comma, and we less income. Isn't it? Now, the one who was asking on what was the question on PPE, which depreciation we use? On which, so the adjustment here, you say I wrote minus or plus adjustment, isn't it? Now I've widened the tip. I've said if it's an asset, you'll add you'll less an expense and add an income, isn't it? So the depreciation here, we took this depreciation, isn't it? We lessed it. Like if we were to use this depreciation, then remember this depreciation has a negative, isn't it? That one we must keep in mind. So it will be plus. If you are removing this one, the same thing, just plus this one. We must be very careful with that, isn't it? So this depreciation has a negative. So if you write minus expense here, because this PPE is an asset, minus, it will be how you have added, because this one is minus, isn't it? So you use plus if and it's an expense, this depreciation. That's why we are lessing it. Let's go to the next, you'll understand. So avoidance the tip, also take that home. But don't worry, the file will be sent today if we finish. Isn't it? Now we go to Bermuda. In additional information, what we are taking, because you're starting with operating activities, obviously we will take depreciation in additional information. These others will go to investing, and this one will go to financing, isn't it? So like I'll copy these ones here, Control C, so that I don't have to repeat. Maybe I can put anywhere, just anywhere you want. So I'll put them here, Control V, isn't it? Profit before tax, earnings before tax, isn't it? Equal this one here, isn't it? We go to depreciation, you are told it was 43. So another thing is finance cost, isn't it? Because it's not an operating activity. That's why we're adding it back, isn't it? The 17 there. Then so we are going this way back up. Another thing is, so we are, these ones are operating expenses, we will not add them back. Investment income. So you see, investment income comes from outside. It is not an operating activity, isn't it? So we will less because it was added. So I'll just be copying here, Control C, Control V. So this one will enter in as a negative. So I start with a negative, then I take on 6, isn't it? Gain on financial asset at fair value. It's not an item of operating, isn't it? Unless it also, Control V. So I start with a negative to less it. Isn't it? So we've done these ones. Okay, there is nothing else here, isn't it? Maybe it's just to additional information. You can see there was a loss, isn't it? Who is it? There was a loss of 6 million. So if it's a loss, we add it back. Loss on disposal. isn't it? And it was of 6. Then I think we've exhausted on everything here. Or what am I forgetting? So we will go to our income statement to confirm everything. So here you must be very careful. Look at the years, isn't it? So the previous value is on this side, while the current value is on this side, isn't it? So first thing that I'm noticing, impairment, or it's called amortization of intangible assets, isn't it? There were 50 in 2021, and here there are 40, isn't it? Amortization of impairment assets, of intangible assets. So it will be equals the 50. So we always go as the tip, isn't it? If it's an asset, previous value minus current value. We are currently at 2022. Isn't it? You don't have to worry. With the tip, you don't have to worry if we add or we less it. Isn't it? So we'll find the total here equal sum, rest tab, control enter. Isn't it? We go to working capital changes, I'll write just WCC. Working capital changes, we have inventory. Control enter, Alt H2, Control Bolt to unbolden. So I'll bolden the one, Control Bolt, isn't it? Another thing we consider here is the receivables. Another thing we consider here is the payables. Control enter, Alt H2 to remove the italics. Isn't it? Equal sign. Inventory, is it an asset or liability? Asset. Is it so previous value? No adjustment minus current value. Receivables, asset. Isn't it equal? Previous value minus current value. So I'll start with the equal sign when I go down. So payables, remember here is 2022, isn't it? So current value minus previous value. We go back. Isn't it net working capital changes? So net WCC Alt equals control enter, control bolt. Isn't it? Then maybe just as maybe let me like here you can remove the interest paid. As I told you, let's now for this now we remove interest paid and tax paid from here, isn't it? So let me skip one line, interest paid. So you must remember interest paid is affected also by an item in there. We have interest payable, isn't it? Here we have interest payable. So interest payable is a liability first, isn't it? So we start with the current value of which it's 7. Let me just put equal sign, equal, isn't it? So it's the 7 minus what is paid in the statement. Minus the 17 here. Remember, if this 17 could have been entered as a negative, we could have added it, isn't it? Minus the 3, the previous one, because it's an asset. So that's why I was saying, you see, this one is an expense, isn't it? It has been paid out, interest payable, isn't it? And the one in the middle, the adjustment, it is what is the expense, isn't it? So control enter, control backspace, you find it is 13. Then we also do tax paid. Equal. So we check first if we have current tax in the statement of financial position. You can see you have income tax payable, isn't it? So we take that one minus. So you see, if I minus here, so it would be plus the 47 minus the previous value. We find that it is 62, isn't it? So cash flows from operation would equal, then we will add the first bit plus the second one plus interest paid plus tax paid, control enter, control bolt, at HBP. Up to there, any question? We have finished operating activities. We are going to investing activities. I'll assume no question, but let me check the chart. Please recheck the tax paid formula. It's good because it was negative. Don't worry, it's good. You see, the problem, that's why I just made this tip a second one. I never introduced it immediately. Let's work with this one. I'll show you where an income applies in. You see a liability, isn't it? Like it was increasing our liability. So like it's more of an income to the liability. See, the problem is you have to understand really the formula, how it works. It's more of a liability, small because it increases the liability. So it's more of an income to the liability. That's why we are lessing it. So lessing it here, we are adding because this one is in negative. That's why it's in parentheses, isn't it? It is negative. So to less it, we add. If we less, it becomes positive. Isn't it? This one is increasing. It is increasing. Okay. You just understand them. It's not very hard. Then we go to investing activities. Sorry, investing activities, isn't it? So first off, you remember investment income, isn't it? That's why it's called an investing activity, isn't it? Investment income of fixed. Then you go to a statement of financial position, isn't it? Remember, we are from this side to this side, isn't it? So acquisition of PPE. Equal sign, isn't it? So it's an asset, previous value, 2021. So I'll open brackets first because this one is the long one. So this one, so here we watch out, isn't it? So remember, we less depreciation. I told you at PPE of 43, isn't it? We will also less. I told you at PPE you consider depreciation, revaluation gain, additions, and any disposals, isn't it? And we made a disposal, isn't it? Yeah. So the item made a net book value of 28 million, isn't it? We left the 28. Again, we check if we have revaluation, isn't it? So here you can see we have revaluation reserve, isn't it? So in 2021, because 2021 is on this side, it was 67, but now it is. So let me just escape first. So maybe here equal this one minus the current of 2022, isn't it? 31. So equal. So our PPE, our previous value is 264. We start with the opening bracket 264. You less depreciation 43. You less disposal 28. Revaluation loss 31. Isn't it? You close your bracket. You less current value. Isn't it? It means you acquired some new PPE at a cost of 165. Isn't it? Then remember, we're still under additional information. Number one, we have not finished with it. You see, so this item had a net book value of 28 million, isn't it? And it reported a loss of 6 million. So proceeds from disposal equal, so the net book value minus the loss. So this is the money that was received from the proceeds, isn't it? Then we consider we're still under the asset part. You see, this part mainly comes under investing, isn't it? We have also financial assets through other comprehensive income. You see that they increased from 10 to 22. But we also have financial asset through OCI, equity reserve, isn't it? So acquisition of financial asset, because you see this is 2021 and this is 2022. It means they increased, isn't it? So acquisition of financial assets. So I'll just write FA so that will be very fast. Equal. So open bracket, isn't it? Remember, there are two. One is in the liabilities, another one is in the assets, isn't it? So at the asset part here, it is previous minus, isn't it? The point is on is this one minus this one, isn't it? You close your bracket plus what is in the liabilities part. So liability will be current minus previous, isn't it? So you open your bracket. So you see with the tip you can do anything. It doesn't become very hard. Minus that one, isn't it? Control enter. Isn't it? And I think we finished everything here. So I'll do alt equals. There's no other investing activity. Control alt. Isn't it? The chart. Okay. So this one is cash flows from investing, isn't it? Sorry, the W. So I'll just align it left. And I do bolt on it. And I unbolt these others. Isn't it? Maybe the first one should be bolt. Skip one line. Financing activities. So I'll be faster so that we finish financing. Control enter, control bolt. isn't it? So from additional information, we talked of shares, isn't it? Let me just take it there. 50 million of convertible loan stock was converted into 50 million ordinary share capital at par, isn't it? So issue of shares equals. So remember this one is falling under, I've said, under liabilities, isn't it? I'll start with opening my bracket. Remember, under issue of shares, we always consider ordinary share capital and share premium, isn't it? So it will be 230. This one here, the current values plus 30. We are considering the, isn't it? Minus the 50 that was transferred, isn't it? You close your bracket, minus current value. Isn't it? That is how much you received from issue of shares. We go to the next thing, the loan, isn't it? Loan. Now, current liabilities mainly come under financing, isn't it? Loan being a liability, so current value. So here is where we add, isn't it? Because the loans were converted into, so it was reducing the loans, isn't it? Plus 50 minus, isn't it? We find that we never acquired a loan and we never repaid again, isn't it? So it was just the same. Then we go to dividends paid, isn't it? Dividends falls here, equal sign. So dividends we work with retained earnings, isn't it? So it is here, the current value minus. So we go to our statement of profit or loss. Are there any? No. So remember, our retained earnings, we always reduce dividends, isn't it? We always add our profit for the year and less dividends. So we less the profit for the year, the 67 year. Then we minus to see if we paid any dividend, isn't it? We minus the 91 there, isn't it? And you can see that we paid a dividend there of 37. So it's negative, control bolt. Then here it is cash flow from financing. Control enter. I don't know why the E loves me so much, so I'll just change it. On the chart, financial asset at fair value. This one is a cash and cash equivalent. That's why it's under current assets. Isn't it? You have not reached cash and cash equivalent, isn't it? Any question? Okay, I'll continue. So net cash flows. Equal sign. So from operations plus from financing plus from investing, I mean, then plus from financing, isn't it? Control enter, control bolt, alt HBU. I just put BU there so that I know it's the total, isn't it? Then I'll do cash and cash equivalent. So I'll just write cash. I'll not write the whole thing, isn't it? Just know that one is cash and cash equivalent brought forward. So for 2021, isn't it? Equal sign. So for 2021, cash and cash equivalent, isn't it? We have this one here, financial assets fair value plus we have cash here, yeah, plus so we have bank overdraft somewhere, isn't it? So it will be minus, isn't it? Minus bank overdraft of 22, isn't it? Control enter. So I'll just copy this one, control C, control V, then I change to F2 to carried forward equal. So it would be the net one plus the that one there, the carried forward isn't it? Control bolt, isn't it? Now for the check, the same thing you are checking, control C, control V, isn't it? No, so we are checking for the year 2022. So we start with the financial assets plus cash, isn't it, of 29 minus the bank overdraft. So the bank overdraft was 0, isn't it? So minus, remember here we have something else, isn't it? Let me take it here. Gain on financial asset at fair value, and we'll say this one is a cash and cash equivalent, isn't it? Minus the 5 there. Control enter, control backspace. You can see that still 89, isn't it? And the timing is very good because I think now I'll have to send the assignment. So the assignment 2 on financial profit and loss and 2 on and 1 on statement of cash flows, isn't it? The assignment we will revise later. I'll take any question. So proceed on disposal, isn't it? Here it is. The item had a net book value of 22, isn't it? Escape. Net book value 22, 28, I mean. Then loss of 6. So if you made a loss of 6 and it had a net book value of 22, what are the proceeds? It means how much were you given? If you made a loss of 6 and it had a net book value of 28, isn't it as simple as that? And it's 22. Isn't it? Okay, so I think the class ends there. Hope today you learned something new. See you in the next class. I think it's on Thursday. And I'll be sending this file also to you guys, isn't it? And plus the assignment, because we have finished the file. So next class, we'll be looking at group accounting. Then we move to analysis of financial statements. The class ends there.